everyone, Zach Pakoff here, and welcome back to another lesson video. Today, I will be going over the 23-1 text. So let's jump right into the video. Okay, so as I had stated before, I'm going to be going over the 23-1 text. So we're starting our new chapter today, and in this chapter, we will be learning about how to account for partnerships. In addition to that, we will also be learning about how to define accounting terms related to forming, dissolving, and distributing the earnings of a partnership, identify accounting concepts and practices related to forming, dissolving, and distributing the earnings of a partnership, journalize entries related to forming, dissolving, and distributing the earnings of a partnership, calculate the distribution of partnership earnings, prepare a distribution of net income statement for a business organized as a partnership, and finally, prepare an owner's equity statement for a business organized as a partnership. All right, so now that I've read over the learning objectives, let's jump right into the 23-1 text. Alrighty, so now we're going to be moving on to the 23-1 text, which is the first lesson in chapter 23. And in this lesson, we will be learning about forming a partnership. Okay, so there are a few key terms that I'd like to go over before we start the accounting part of this lesson. So a partnership is a business in which two or more persons combine their assets and skills. A partner is each member of a partnership. And a partnership agreement is a written agreement setting forth the conditions under which a partnership is to operate. All right, next we're going to be talking about journalizing initial investments by owners. So this first transaction reads, on January 1st, received cash from partner Sawyer Hess as an initial investment, $15,000, receipt number 1. And the second transaction reads, also on January 1st, received cash $10,000 and office equipment valued at $5,000 from partner Kendra Sullivan as an initial investment, receipt number 2. Okay, so when we journalize initial investments by owners, there are multiple steps that we have to follow in order to complete this process. First, we write the date, which is January 1st, in the date column. Next, we write the account titles in the account title column. Now, for Sawyer Hess's investment, we write the account to be credited, which is Sawyer Hess Capital. And for Kendra Sullivan's investment, we write the account to be debited, which is office equipment. We also write the account to be credited, which is Kendra Sullivan Capital. After that, we write the receipt numbers, which are R1 and R2 in the document number column. Following that, we write the amounts in the general debit and credit columns. Now the only credit amount for Sawyer Hess is $15,000 for the cash investment. However, for Kendra Sullivan's investment, the debit amount is $5,000 for the office equipment. So the credit amount for Kendra Sullivan is $15,000 for the total investment. And finally, we write the debit amounts to cash, which are $15,000 and $10,000 in the cash debit column. Okay, next we're going to be talking about journalizing the withdrawal of cash by a partner. So this next transaction reads, on January 15th, Kendra Sullivan, partner, withdrew cash for personal use, $500, check number 10. All right. So when we journalize the withdrawal of cash by a partner, there are multiple steps that we have to follow in order to complete this process. First, we write the date, which is January 15th, in the date column. Next, we write the title of the account debited, which is Kendra Sullivan drawing, in the account title column. After that, we write the check number, which is 10, in the check number column. Following that, we write the debit amount, which is $500, in the general debit column. And finally, we write that same amount again as a credit to cash in the cash credit column. And one last thing to note here is that the partner's drawing account is an owner's equity account that has a normal debit balance. So it increases by a debit and decreases by a credit. All right, so the last thing that we're going to be talking about in this lesson is journalizing the withdrawal of merchandise by a partner. So this last transaction reads, on January 15th, Sawyer Hess, partner, withdrew merchandise for personal use, $200, memorandum number 1. Okay, so when we journalize the withdrawal of merchandise by a partner, there are multiple steps that we have to follow in order to complete this process. First, we write the date, which is January 15th, in the date column. Next, we write the first account title, which is Sawyer Hess drawing, in the account title column. After that, we write the memorandum number, which is M1, in the document number column. Following that, we write the debit amount, which is $200, in the debit column. Then, we indent about 1 centimeter and write the second account title, which is purchases, in the account title column. And finally, we write the credit amount, which is $200, in the credit column. All right, so that is the end of the 23-1 text. In the next video, I will be going over the 23-1 work together. Okay? Thank you.